Tim Biggam, head of options, joining us. So Tim at Delta Derivatives. Tim, what do you think about this? I mean, this is a fun one, right? Because on one hand, as Alex points out, people are averaging 3 hours of Tiger King a day, which seems like a lot, but hey, I like to play video games, so I mix it up a little bit. But there's clearly a moat for them that has been entrenched again. But there's also a market here that looks like there's a huge disparity between companies like Netflix and everything else. And many have been coming on this program and saying that gap needs to close with names like Netflix coming down.
Yeah, absolutely. I think Netflix has gone, to use a bad pun, a little too viral here. I think, the subscriber growth is all but priced in on this, even on the most optimistic analyst expectations here. And you look at the vol skew, I think that's kind of a giveaway too. Yesterday we saw 3-to-1 calls versus put trading. That got to extremes. And when you look at the stocks around 440, so that 500 call carries about a 160 implied volatility. The 380 put, which is similarly out of the money, only about a 140 implied volatility. Normally you see that reversed here. So everyone positioning for kind of continuation of this big rally here. As a contrarian, I kind of like to position into that. So I'm guardedly bearish up above. Wouldn't mind being a seller up around that 495 level. That equates to that expected move of about 55 points or so. So I'm hanging my hat there, selling the 495 calls, buying the 500s for protection, getting well over $1 for this. So really like the risk-return trade-off on this. And I think this will be kind of the classic, buy the rumor, sell the news, unless they have an absolute blow-away number on subscribers. Earnings and that don't matter in this quarter for most stocks and haven't mattered really for Netflix. It's all about subscriber growth. And I think they're actually probably, borrowing forward here. So they're bringing demand forward. If anyone hasn't signed up for Netflix by now, I don't think you're going to get a big uptick over the next few quarters after this one. So all things considered, I think this rally may stall out here on a further move higher. And I don't mind being a seller on that move.
Okay, so you've got cushioned the upside about 10%, as you point out here. You're able to keep some of that as you're selling some options here, but overall, you're looking for Netflix to fade even if there is a pop. And if it does, I mean, it'd be quite a trade here, Tim, because right now the analyst community is loaded up against you. 30 still say to buy it, only 7 say to sell, and 6 hold out of the community of analysts. That's a large one, 42 cover it. So even though their price target has already been surpassed by the stock, they're not changing their rating.
Yeah, absolutely. And I kind of like that from a contrarian perspective, too. When everyone's leaning on one side of the boat, usually if it tips over quickly here. So I think, you may see a reaction even bullishly, post earnings and especially that subscriber growth number. But then when the dust settles, as we've seen in the past with Netflix over the, 3 or 4 years prior, we can sell into that strength and be richly rewarded here. Here I'm kind of pre-positioning in a defined risk way to be a seller into that strength if it does happen. Obviously, if it doesn't happen, even happier, and that trade will go away. So really kind of a very short-term trade, somewhat aggressive here, but defined risk that Netflix, unless they have an absolute blowout number, will probably fade either post that release or somewhere over the next few days.
Tim Biggam joining us from Delta Derivatives. Good stuff as always. Appreciate you playing ball here, getting us ready for earnings.